Welcome, everyone. This is our spring 2014 market outlook. I think there's been some exciting market action. Janet Yellen from the Federal Reserve, the chairwoman, has really taken reign of and taken the responsibility for tapering quantitative easing with a surprise move on Wednesday, the 19th. For those that were in our live trading room, the market was pretty inactive on Wednesday morning, and right up, approximately about past an hour after the market started to gyrate in a little trading wedge formation. We have a great setup to the downside, just an incredible good day trade on a safe side short. We're going to talk about some trade setups that are happening. We did a little bit of that this morning for several groups, and as well as our live trading room. So with that said, I want to talk about more longer term stuff and more intermediate term stuff. So with that said, let's get started. First off, this is an important risk disclosure statement, and I know we have several of our students in here. I say hello, Andy and Sonia, and a few others are coming in. So welcome, everybody. Of course, I think what a lot of people, and I'm not sure the experience level for a lot of traders, but I'm going to tell you something. I've traveled in the last few weeks. We were at New York Traders Expo, and I'm not sure if anyone saw that. I had a little issue with a little physical ailment. I got hit by a car loading groceries in my car. Anyway, before that, so I had a little back problem. And it made it a little challenging in the live trading challenge, which my opponent and friend beat me by 60 large dollars. It was, but it was good camaraderie. Long and the short of it, we were out in San Diego last week, and wonderful Scottsdale, Arizona, as well, spreading a message. And the reason I share that with you is because this one bullet point here about stop loss, stop limit orders, not necessarily limiting losses. People have a big problem with not knowing why when they put a stop. They, especially new traders, do not understand that if a market gaps beyond that stop, especially in the futures, when you have those occasional Globex rules with a 4-point 16-tick move, you're not stopped out. Your order is still working as a limit order. So it is something that stops are for all level traders should know that nothing in this world is guaranteed. But in the meantime, we would appreciate if you hold off any questions until the end. Just jot down your questions so you don't forget them, though. I want you to do that. I did improve the resolution to one of my students who suggested to expand the from the settings, but I want to focus on the material because we have a host of people that are relatively new to the markets, a host of people that have just started to begin putting their foot back into the water, which is quite unusual. And I know this for a fact because I just mentioned being in New York, people were telling me left and right, they've been burnt, they're just getting back in. We're in San Diego at the event there. People didn't even, there were a lot of novice traders and people that were struggling. San Diego, and as far as the people there, it was a very large audience, great bunch of people. And then as far as Scottsdale, it came time to asking the same old question: how many people have been struggling with volume? And people said, well, I've been struggling with this volume thing all the time. And I tell people there's a better indicator out there, and so that's what we're here to share with you. So you may have some questions. Just don't forget. I love having this little slide there. That's my wife. She was a volunteer marshal at the Honda Classic, and if you see that little sign that she's got, it says quiet. That's because after 26 years of marriage telling me to be quiet, she is a professional quiet person. So she was very well qualified to tell the audience at the 17 tee box to be quiet. And so anyway, I just thought I'd use that from now on because it's a very nice thing that says quiet. Hold your questions off to the end. Anyway, and I do hope that this presentation serves you well for the information. All right. Now, for those that are new that don't know me, I'm not going into a long list of accolades, but I've written some books in the market. This was over a decade ago. I can't believe where a decade went. Candlestick and pivot point trading triggers. It revolutionized and it really did popularize pivot analysis and pivot points and moving averages using a high-low close divided by 3. Many educators, other traders use now, because of this information, a pivot point moving average component within their own studies. So that was the book that kind of launched the idea. It was something that I had worked and developed. It was unique. It was my original work. Probably been using it for over 33 years. We came out with this book, Mastering the Stock Market, which I'm very proud to say it really, you know, even my first book, Chapter 1, was very long-winded. And I elaborated a little bit about seasonality and a little bit about, you know, how stocks are correlated to commodities. You can, back then there was a brand new product called an exchange-traded fund on the FXE. And in that first chapter, I talked about how stock traders could take advantage of currencies using that product, and it should, you know, grow. And here we are, you know, 10 years later, 9 years later, and it's exactly what's happened. Mastering the stock market, I thought it was so important to just cut to the chase. We started the first chapter off on seasonal and sector analysis, and we're going to get into that tonight. So I was the founder of and creator of Trading Triggers. It's an educational program. I've created software. Many of you that are users from TradeStation to Thinkorswim to Trade Navigator and Person's Navigator are familiar with the PPS buy-sell indicator, or the bullish-bearish momentum indicator, the person's pivots, and of course our high-close doji, low-close doji scanning capabilities. A lot of my work has been noted, and out of everything, and I share this, and I'll probably share this for another few months, not to really boast or brag, and just to keep humble, but I'm very, very honored that Stock Traders Almanac, run by Yale Hirsch Still, editor-at-large. Yale Hirsch, Yale is approaching 92, for gosh sakes. Yale Hirsch started the Stock Traders Almanac 47 years ago. It's one of the oldest financial publications, and they dedicated the 2014 Almanac to me for some of the work that I've been doing. So I was very proud of that. So the question begs, now that Janet Yellen's out of the way, now that we see what's going on in the stock market, has the ship sailed? Did we miss the boat in the markets? Well, I got news for you. Take a look at this boat. This boat right here is fairly important in my life. It's actually, I am a direct ancestor of Fletcher Christian from Mutiny on a Bounty. My grandmother was a Christian, and my uncle Jack Christian, was a mayor down in Baton Rouge, Louisiana. In any event, they were the family, the ancestor tree of Fletcher Christian from Mutiny on the Bounty. And I found this, and I thought it would be appropriate for using the line, has the ship sailed? Did we miss the boat? I thought it was kind of a good tie-in. Because this is the Bounty, the replica of the HMS Bounty, which you may have missed that boat because it sank a few years back off the coast of, I think, Carolina or Virginia, trying to escape a hurricane. So that vessel, and it did lose a crew member. I believe the captain literally drowned with the ship. Sad story. But I don't think we've missed the boat for trading opportunities, and certainly not in some stocks or sector ETFs. And that's what we have to be prepared for, and when to use them, and what we can do to identify trading opportunity. I believe there will certainly be times to hedge using inverse leveraged ETFs. I think it's the tools we use to analyze the markets that is going to make the difference for you, all right? And the indicators in the studies that I use are simply seasonal analysis. I use relative strength comparative analysis, which we need to get into a little bit tonight. The indicators I use are specifically targeted for health and breadth of markets when it pertains to stock indexes. So for example, if you're just trading the S&Ps, you better know what the heck is going on in the other indexes like the NASDAQ, the Russell 2000, the New York Stock Exchange Composite Index, and it doesn't hurt to look at the Dow from time to time. So we look at the breadth of the market, which I use advanced decline comparative ratio analysis, and another indicator called the McClellan oscillator. And I think it's very important to reintroduce that to you folks and let you know that there are indicators out there that will give us a better clue to the market and the health of the market. And that's what we need to sit down tonight, especially after what we've seen from the Federal Reserve and what's going on in the markets. So we're going to cut to the chase and share that tonight. Also, moving averages. I use proprietary settings. I do use a series of pivot analysis, which is the high-low close divided by 3, and certain proprietary settings in my indicators. Obviously, I use Person's pivots in multiple time frames. Multiple time frames, also the key concept we introduced was, instead of a monthly calendar time period, since a lot of times indexes and stocks expire or migrate or pin at certain strike prices close to expiration, we developed a pivot point based on option expiration cycle months. So the third Friday of the month rather than a calendar month. We also use longer term analysis using quarterly pivots and the financial quarter, not just a roundabout quarter like every 3 months. So January, February, March is 1 quarter, April, May, June. And that's why it's important, because we are coming into, as you can tell, at the end of this option expiration or quadruple expiry, which is tomorrow morning special open, we're going to conclude the quarter at the end of this month, and we have a new quarter. So today being the first day of spring, I thought we would spring into action and start to discuss what the heck we can look at. Also momentum, closing prices compared to past price action. You know, I have this key concept I introduced in that second book, which is the one that had my face on it, that was written over 10 years ago. And it was called the last conditional change candle. And we use that for identifying breakout, support, and resistance, et cetera, et cetera. That's very crucial. We'll discuss a little bit about that tonight as well. And in addition, the high close, low close doji pattern, and a few others that we have. So I think moving forward, I asked this, and I'm just going in, and I'd like to share when I go to a conference and when I do personal seminars, I like to do a personal survey to find out where the audience is at. And I think what I've been hearing out of the biggest obstacles, people don't really have a problem finding opportunity. They don't really have a problem pulling the trigger on the entry. They really don't have a problem sometimes getting filled. Of course, naturally, sometimes we'll put limit orders. It'll hit our exact number and we won't get filled. And risk management seems to be an issue. Stops are too tight. Stops are too far. And I think the biggest obstacle is exit strategies. And most people, A through D, are not really as big of a problem as much as E, their exit strategy. Most people are having a difficult time figuring out when to take a profit. So I think that's kind of an issue for many traders. I don't know if you can relate to that, but it seems that in the last month, those 3 venues, the New York Traders Expo, talking with people individually at the San Diego event, and also a couple folks at the Scottsdale meetup group, it seemed that people were struggling with the exit strategy. So I think what's key is, once you have identified an opportunity, now one needs to explore what's your risk and reward, and that's going to help determine a position size. You know, there's an old phrase, whenever you're right, you're always in 1. Whenever you're wrong, you're in 100. And I think if you determine via a specific formula of what your size per your position of your risk capital is based on the risk of the assumed trade. Can't guarantee what the risk is if you're using a stop, because the market may open bad. You might have an earnings risk, etc. if you're trading stocks. But at least you have an identifiable starting point, or a guide, or at least a playbook of what your risk is. And with that amount, then you use a certain percentage against your trading capital. And that's a relative simple formula that many people should employ. Now you got to determine what would work best. If you're trading stock and you're looking at Apple, and we want to go over Apple tonight, by the way, because it's in a sector that actually starts to begin entering a seasonally strong period of time. And I would beg to probably poll the audience. How many of you guys have been hearing people get real bullish on Apple lately? If you've been hearing people be bullish on Apple, type in Y. If you've been hearing people being negative on Apple, type in double Y. Just a simple, let's see if we can just see if anyone's been hearing it in the news. We got FJ says Y, Jerry Lawrence. Hey Jerry, how are you, man? Richard, Becky, double Y, double Y, double Y. We've got more double Ys. Charles Wilkinson, double Y. So boys, so we, you know, there's actually a few people that have the majority of responses are double Ys, and more people are seeing at least negative news or abandoning Apple more than positive news, and that's kind of interesting. So we're going to revisit that in just a moment. If you notice today, there is a company who is one of the, I would say, what we would call a supplier, and Qualcomm. So if you take a look today, we'll cover that, and I want to share that with you, because if you look at QCOM in today's price action, it's kind of interesting. QCOM went straight to the moon. Just a small little move up, about just under 2%, 1.88% to be exact. AT&T was also up 3.5% today. AT&T does sell a couple iPhones every once in a while. I didn't mean that. That was a little sarcastic. I apologize for that. But AT&T, interestingly enough, Verizon as well. So between, the subsidiaries were up and Apple was down. I mean, the dog can't be moving without the tail wagging, so to speak, as they all say. And I understand about SanDisk, and there's some other components in the technology space that had big moves today. But I want to discuss with you some technical indicators and some seasonality that I think combined many of you might not be introduced to, and we can start to take a look at how we can, determine a trend direction, what tools we use, and then what would work best. If you're, a heavy directional or your indicators are flashing or showing signs of strong directional moves, if we could maybe look at ways to determine what risk might be and what the profit target or what area the market might go to, it may help you to say, well, what would work best? Should I do a capital-intensive outright stock purchase, or maybe use an option position? And what option position would you want to use? I mean, there's stock replacement strategies where you use shorter-term high delta or longer-term mid-range delta outright positions, or maybe there's credit put spreads. If you're outrageously bullish, we have the infamous ratio back spread, sell a close buy option, and whatever that delta is, use 50% of that delta and buy 2 further out money, so you come to a delta neutral even money strategy where you're short 1 close to the money but long 2 further out. If the market pops, the shorter or the smaller value deltas will pop. If you're an option strategist, you know what I'm talking about. Tonight is not designed to get into options, but what we're here tonight to talk about is how do we determine our direction and what markets are coming into changes of directions, and that's what we're going to talk about. All right. So now, with that said, now we got to do a little entry tactic. Are we going to use limit orders? Are we going to use a market order? Or do we use stop orders for entry? Under certain conditions, if you're using a breakout method, under the right conditions, under the right chart patterns, that makes complete logical sense to go with the direction and let the market, like riding a wave, let it take you into shore, so to speak. So if you're body surfing, you wait for the right wave to come and let it take you with the move. That was kind of like one of the setups that we had yesterday on Fed Day, which worked out very nicely. So with that said, let's talk about relative strength. And the first thing I want you guys to take a look at, I have listed, and it's color-coded here, all these symbols. XLE stands for the energy, F is financials, I is industrial, XLK is technology, P is staples, U utilities, V healthcare, Y is consumer discretionary, B is materials, IYT is transportation, XRT retail, IXTC is communication, telecom to be specific, KRE, that's the green one. That's this mean bad boy right there. That guy's up 6.46%. since the beginning of March alone, just the KRE alone. And then the ITB, which happens to be the home builders. And that's an ETF that actually reflects the actual home builders, which include Toll Brothers, Lennar, DH, Pulte Brothers, et cetera, et cetera. Unlike the XHB, which is a peripheral home builders, which has, like, Williams and Sonoma, it has Bed Bath & Beyond. It has the peripheral markets in the, and that's what we call what I mean by the peripheral markets, okay? So there's 2 different home builders. One is, when you say home builders, you're talking about the ITB, or you're talking about the XHB, Home Builders ETF, Sherwin-Williams, Tempur-Sealy's in it, Lennox, Leggett & Platt, which is a furniture company. So if you notice here, we've had a little bit of downturn as the regional banks for the month of March is up 6.5%. The home builder, the ITB, the home builder sector is down 6.5%. Let's take a little longer look. What's it look like year to date? Year to date's a little bit different. And what the biggest gainer of the year so far has been utilities and healthcare, but healthcare is starting to fall off. And look what this green line's done. So first off, the green line is the regional banks. And right around at this point here, around 224, around the 20th was when the last FOMC meeting was held, and it started to gain some traction. Now we have bigger movement in the regional banks. So the regional banks are upticking, and it's like a racehorse. As you can see, it's starting to outperform. You can almost see a living, breathing entity to find out what sectors are moving, what sectors are starting to outperform to the upside, and what sectors are starting to peter out to the downside. So now, let me explain why that is critical information. If you had in your hands a playbook that said certain times of the year, certain sectors go up, and certain times of the year, certain sectors go down, then I want to see on a relative performance, I want to start to see the sectors that are supposed to go down, I would like to see them start to underperform. The other sectors that are supposed to go up, I would like to see them outperform all other sectors. This is a relative strength chart. This is something that I created on our Trade Navigator page. Another special indicator that we like to look at is called the McClellan Oscillator. And this is a weekly. It says right here, this is weekly. So since we're all kind of curious about the stock market, this morning I made the comment in a presentation that I did. I said, you know, I'm on alert for the first time in a long time. I have a lot of confusing mixed data about the equity markets. And I know some of you were listening in on that today. And I said, you know, I have some conflicting information. We've got poor volume analysis in the NASDAQ. In fact, let me just bring that page up to you, and you can see what I'm referring to. So let's just go over to our Index AD OBV page. It stands for Advanced Decline and On-Balance Volume. Well, give us a second. These chart pages will load. It's probably going to be slow. It should be right up for us. Perfect. Okay. So one of the charts, in fact, everything on this chart, you'll notice these are the annotations that I was talking about. This is a last conditional, that red candle is a last conditional change. If you take that 3720 out, I sense we have a new leg in the market to the upside. Part of what I was looking at was this is the advanced decline. This is the advancers versus declining stocks that is relates strictly to the NASDAQ 100. A couple comments that I had made is that we are seeing a little bit of divergence in the fact that the AD line is not moving aggressively as the stock market is moving. But the biggest concern of all was the volume. But here was the trick. I said the NASDAQ 100 has a lot of biotech weight to it. And if we go over here, here's the NASDAQ 100. Here's all the stocks that are listed in the NASDAQ 100. And you go down the list and, you know, you may find Alexion Pharmaceutical. It's in the biotech. And you'll find Amgen. And you'll come down and you'll find Biogen. And you'll find Celgene. And you'll find all the good big names. All right? And you'll say, wow, you know what? Person's right. If I just did a little bit more homework, maybe that's why we're seeing some overall weakness in some of the NASDAQ weights. And so that may explain that. Now, I don't want to confuse you guys, but I think if you're going to trade, it's important to understand and to know what the heck you're trading. So there is a heavy weight in biotechnology. The funny thing is, biotechnology has a seasonal time frame of weakness right now. And so that's one of the things that I think is pretty amazing. And when we take a look at the top row, what I wanted to share with you here, this is the S&Ps, this is the NASDAQ, This, as you can see right here, just bring it up to your attention, is the Russell. I'm using the futures. Everything on this chart that you see here, the orange triangles are sell signals. The green are buy signals. Those are the PPS, buy and sell. As you can see, I have options expiration. So we've just expired at the predicted resistance, so to speak, the resistance levels, and I'm going to turn that feature off. Now I'm going to go up to quarterly. So the end of the quarter is in about 2 weeks. And as you can see, it's now giving us a price projection. This is kind of bizarre. You see this right now. It's giving you a theoretical value, or person's pivots is actually giving you, if the market, assuming that this quarter, which start at the beginning of January, which will end at the end of this month, assuming the low is in for the month, assuming, this is an assumption, assuming the high is in for the month, and assuming the market just closed right here, then, if that's true, then this will be the outlook for the next quarter. Notice that the red line is projected to be higher and the green line is projected to be higher. It's actually giving us an artificial, or it's giving us a futuristic valuation that next quarter is actually giving you a higher high, higher low combination. I find that interesting because this morning I said, you know, what's really confusing in the market here, especially after the Fed, is that around about the 3rd to 4th week of March, the end of March, it's not a seasonal weak time for the market. Usually April, it's sell in May, go away. So from a seasonal perspective, there still might be some more upside in the market. In fact, one of my comments was, if you just look at the S&Ps, and if we look at the S&Ps here, I was comparing the old highs with old advanced decline and old on-balance volume reading, and we just didn't find the same type of outlook. Now, what's interesting is, look at the arrow that's down here in our bottom right corner. The seasonal trend for the market, typically we see a little downturn and then it goes back up going into April and into May. So for the stock market, there is some concerns that I have, but I think even if we go, and if you do quick math, if the S&Ps hit 1900 level, if the S&Ps hit 1900, anywhere from 1895 to 1910, it's about a 3% year-to-date gain in the market. So the key is volume. Is it a helpful tool? Because this volume histogram for a lot of people has been very, very confusing. And over time, you say, well, here's a volume decline, and yet the market had one of these amazing runs, and yet people even had a high closed doji, as you can see right here. The market had a nice, amazing pop to the upside. In fact, look at the confirmation using advanced decline. Advanced decline was rising, meaning more stocks were moving in tandem with the price appreciation in the index, and the on-balance volume was appreciating. It was rising with price. That's great confirmation. Meanwhile, people are using this volume histogram saying, well, this rally can't last because it's on light volume. But yet, there goes the market, and there it goes, and it keeps going, and people get confused. And I think part of what I was explaining earlier a few minutes ago is there's got to be better indicators, or I think one of the things that people get confused about, and a strong message is, I think what's happening with volume, and the reason it's not as effective as it was once written about, is we have so many choices and ways to trade this market now. One of which is we can use option strategies. I can sell a put, buy a call. I could trade the S&Ps. I can trade spiders. I can trade a basket of stocks. But by gosh, if the market is trending higher, the use of on-balance volume is a little bit better of an indicator to find out the true trend of the market. So when I take a look at the weekly analysis, the longer-term analysis, and I want to share this with you because as we are concluding the option expiration, what did today's price action look like? This is now the cash market. This is the spiders. Well, first off, we have an uptick in on-balance volume, if you can see that. We still have bullishness in the weekly advanced decline. And really, my opinion changes in the market unless we go and generate a sell signal, or unless we take out this particular week's low. And that particular week's low is 183.75. And if you notice, if you get below that 183.75 area, notice where you will be at. You'll be at below both of those moving averages. So for right now, if you think about the essence of construction of technical analysis in its simplest form, a bull market consists of higher highs and higher lows, correct? It also consists of closes greater than opens. It also consists of closes closer to the highs. Now, I'm not saying I'm a rip-roaring bull. I'm a petrified bull. I'm being very cautious here, but I'm still a bull because if you note here, you still have higher lows intact, and you still have, even though this is a pause, if this is a pause before a continuation or a breakout of this high, if you take out last week's high, folks, you got maybe a new leg coming up in the market. The advanced decline is not acting bearish, and the volume on a weekly basis is not acting bearish. So here are, without using indicators that deal with price, and when I say that, like an oscillator, stochastics, moving average convergence, divergence, Bollinger Bands, all of those are more price. I'm using different momentum indicators, the PPS, simple chart analysis, advanced decline, and on-balance volume, and of course seasonal analysis to help give me a conclusion. Should I be long the market? Should I be short the market? And right now, it's still telling me we need to be long the market. Now, there are specific sectors we need to be long. I also want to point out, and let me go back over here, and I'm going to go over to this page right here, and I'm going to go to RS Analysis and Spreads so that you can see this live. And this will just take a second as it loads the page up for us. There we go. All right. So looking at the McClellan oscillator, and what I wanted to share with you is this is, again, a weekly chart. It says so right here. It's the same chart that we have in the PowerPoint presentation, but I want to show you this live. This is the overall trend, and this is the spread differential between the NASDAQ 100 and the S&P 500, and I'm using futures to adjust for overnight action as well as the continuation rollover. But the McClellan oscillator is based off of the S&P 500, the spiders, as you can see here. This chart right there is a spread differential on the cash spiders versus the Qs. And if you were trading this market, look at this black line. If you notice, this black line, does that look bullish or bearish? It's still in an uptrend. The funny thing is, the McClellan oscillator is at a neutral standpoint. It's not oversold. The market is up, and we're not even overbought or oversold. So at this point in time, we have potential upside left in the market based on a different indicator, the McClellan oscillator. So I just wanted to share that with you so you could see that live, all right? And that's what this chart represents, the McClellan oscillator on a weekly basis against the spiders, the SP 500 cash market is at a neutral reading. That's pretty bizarre. So looking at the spread relationship, as this black line trades above that blue line, typically the market historically has gone up, and that's exactly where we are right now. Now this horizontal black line, friends, that represents that peak high. We pierced that high, so we actually made a higher high. We saw a little retracement. So if we take this spread, this high out that was established the other day, we do have reasonable assumption to see higher prices. Now let me get into Apple real quick and explain what you see on your charts here. On the right, as you can see, is a daily chart. And I screen captured this for you just a little while ago. Okay? Number one, we have, at this point in time, we have a daily chart, and this is just a simple, it's not just overwritten against, just so that you can see the overall trend, a nice little flattening resistance line. The daily on balance volume doesn't look great, but it doesn't look bad. I mean, the market from the low that we established in January, the market's rallied, it pulled back, it hasn't gone anywhere. But it certainly is in kind of a little wedge formation. You can see it kind of coiling here. This last, where that orange person's pivot study, which is PPS sell signal, exists right there, we get back above 540. and we see an uptick in volume. Friends, look at the seasonal trend of the market. Typically, Apple starts, it doesn't go anywhere during this time of the year. From a seasonal perspective, Apple actually starts to build strength from a seasonal perspective like at the end of this week. So starting into next week, we want to watch for breakouts above 540. You may want to write that one down. Look at the fact on a longer term basis, we've actually on a weekly basis, we're in a buy signal, but it just hasn't gone up yet. Now, look at the on balance volume reading. It is moving in an upward pattern, correct? But when you look at the volume histogram, it's in a negative, or it's making lower lows. So to an individual who's not properly trained or doesn't know how to use specific indicators, if you're just looking at volume, you'd say, well, Apple's not going anywhere. There's no volume. Now, it's not a guaranteed 100% foolproof method, but I am here to tell you it's a much better approach to looking at the on-balance volume. If you've been struggling with overall volume patterns in the market, look at the overall trend of this volume pattern in the marketplace. I mean, obviously, you can see that the overall trend has been down. But price actually, since May, has gone up. Look at the on-balance volume. It's actually the opposite. It's almost like a mirror effect with the volume. So I'm here, hopefully, to understand there are certain ways that we could look at the market and say, hey, I think there's enough, it looks like there's more accumulation of long positions. That's what's probably holding this market from going down. And from a seasonal perspective, it really doesn't do anything until we get out of this March time period, and then we get a pop in the market. So if we get out of 540, you break out above 540, I mean, that's a $540 stock. Am I going to be looking at buying a capital-intensive product like that, or do you think maybe I'll be choosing some type of an option strategy? One of the neat things about sharing with the folks the seasonality, it's not just the general trend of the market, what it typically does, but it's also the duration of when that seasonal trend ends. And that may help you to identify what type of option strategy do you want to employ and for what time expiration. So now you're getting condition of the market, direction of the market, health of the market. And that, my friends, is very important information. And I'd be honest with you, I'll be looking at more of, in this case, I feel that we could easily come back and test the 570. I don't think that we're going to see, if we do see 590, perhaps we could, maybe take out this high depending on the strength. And I'm not here to tell you that we're going to, this market couldn't go to 650. I'm just saying that I think the reasonable expectations of breakout above 540 to come back logically and test the 565, 570 is a very realistic target between now. If it does see that breakout, if it does go with the overall trend of the market, and as you can see, the overall trend of the market is up. So there's a trade to look for, and based on the last conditional change method, that's why we've got 540 on the chart there. So with that said, these are some of the nuances that we want to look for. By the way, this is the XRT, the retail sector. And the retail sector, while it hasn't really done a whole lot, it doesn't even start to begin. Look at this year, right on cue, it starts to move in a seasonal trend to the upside. Boy, when the consumer starts to dig out and the snow starts to melt, there's going to be all kinds of lawn and garden things to replant, and people with a lot of damage in yards. If you're married like me, women, somehow they do like pretty yards. They don't, guys, I don't know, we don't care. Call someone, cut the grass, I'm busy. But the majority of people, if your wife says plant some bushes, you're getting those bushes planted. The bottom line is, I think logically, as we come and we change into spring, look at the retail sector. It's a strong, strong seasonal pattern to go up. The weekly on-balance volume, friends, is just off the chart. If you were trading this blue chart, and let's just pretend what I've got my arrow, as you can see on your screen. Can everyone see the arrow that I'm pointing to right here? If you pretend that was just price, but it's not, it's volume. I mean, it's breaking out, making new highs. So if it's true that volume precedes price, if the weekly on-balance volume is starting to break out and making newer highs, then it makes sense that the XRT, when it's in a seasonally strong period of time, has a better odds of probability of pushing to a new high. How much higher? I think we could easily see on this one a 4-point move, which is 5%. A 5% move in the XRT. Now we just do a top-down approach in the marketplace. This is the regional bank sector. Now we took a piece of action out of this market based on A, seasonality, B, relative strength. So if I can say that, hey, seasonally this market, it tends to move up and then it tends to take off and you get a little buy signal, and you want to take a little move and take a quick 5% move, that's great. The one thing that I would be concerned about in the regional bank sector is the fact that the weekly on-balance volume, as we have a new breakout high, we don't see that volume participation in the on-balance volume. For once, you see, which is very unique, you start to see an increase in the volume histogram, but the on-balance volume on a weekly basis is not confirming this rally. The daily on-balance volume is, however, and I think what that's reflecting is potentially, and then today we had the stress test with the banks, and Zion Bank didn't pass, so maybe there could be a little bit of short covering in this market. Maybe this thing's a little overdone. From a seasonal perspective, though, we're starting to enter that seasonal trend. Perhaps it just kind of, expended its energy in the market. And I'm not chasing the regional banks at this point. We were in that sector, and I'm staying out for right now. And the reason I'm staying out right now is because of this guy right here, and the fact that we're kind of ending a seasonally strong period of time. So it doesn't mean that we can't look at some banks. It just means the regional banks right now, we need to see a little bit of more technical volume come into the picture. Now, here's one for the roses, so to speak. This is Nordstrom. And we talked about the retail space, the XRT. And the funny thing is as we get into spring, we start thinking ahead of time, and we start thinking of change of clothes. Eventually, it's got to stop snowing in Chicago. Eventually, you're going to see a 70-degree day, eventually. And eventually, everyone's going to want to shed those down jackets. I think St. Patrick's Day, it went to 50, and people were in bathing suits sunbathing at Oak Street Beach in Chicago, I heard. I don't know if that's true, but in any event, the Nordstroms, Macy's, some of the bigger retail apartment stores, and apparel. These are sectors that we want to start to focus in on. And the seasonal trend looks pretty healthy for Nordstrom itself. The on-balance volume isn't really seeing that action, but from peak to peak, it really hasn't moved. It's just seen, a move from about 63 down to 54, back to 62. But it's actually, the weekly is really interesting to me because it's actually holding up. And I think that unlike the histogram volume down here reflects there's no volume, the on-balance volume says something different. And the fact that we're in a seasonally strong period of time really gives us an eye-opening for potential of the market. So here's the key, folks, and here's the takeaway. If we have certain stocks acting bullishly when they're supposed to, and there's decent volume behind them, then it's got to say something about the overall economy. Certain segments of the market, and in fact, I want to go through and take a quick gander here. We're going to go over here to seasonal on-balance volume. And I'm going to, in fact, there's a chart page that I made that presentation for you. And I'm just going to go and look at, let's do this together real quick. So let's go over and say, all right, the NASDAQ 100, Alexion Pharmaceutical. So if I click on this name right there, and all of a sudden you go, gee, John, seasonally, this is a stock. Oh, it is a biotech. See how we just click one name and all of a sudden the pages are linked. And you say, well, you had a PPS sell signal last week, and you're in a time frame where seasonally the market goes down. The weekly on balance volume is going down. The daily on-balance volume shows that the market's struggling. That's one stock. Amgen, what does it look like? Well, Amgen didn't go down this week. It's in a seasonally weak period of time. The volume hasn't rolled over. The daily volume, though, here's one I would be careful of, because as the price is going up, where's the volume accumulation for this stock? So Amgen is actually in a seasonally weak period of time, and this one might be an option expiration play. You had several weeks of dojis in a row here, and you're at a resistance level. This is a quarterly pivot resistance. That's the quarterly targeted resistance. So this might be one that could be a good play as far as a credit call spread, because this volume is not showing that this rally is actually sustainable. When we take a look at Biogen, for example, it's starting to show tiredness as well, and it's in a seasonal weak period of time. We'll take it down to Celgene, and it's already started its descent. So a lot of the names, and of course you can see with Celgene, it's in that biotech space. The takeaway there is the biotechnology sector, for the most part, is in a seasonally weak period of time. So this is something that can last going into May, so perhaps for the next 30 days, you might see people taking money off the top, which would stop the ascent of this sector. It'll also weigh on the NASDAQ 100, since I've just shared with you that a lot of these names are in the NASDAQ 100, and maybe that's what's to explain about why we're seeing weakness in the NASDAQ, because the weight of the biotech. Hopefully that makes sense to everybody. But we actually do have strong sectors that we're entering in right now, as we talked about. And I think that's, again, the key to making better decisions is having better tools. I don't know if you relate to that, but if I have a better tool and I have a better skill set of analytics and analyzing the market, I stand a better chance. The definition of insanity is doing the same thing over and over again, and people are looking at the same old stuff and wondering, man, how do we pick stocks? And, we can pick stocks by going over here and going right up here, and I can say, hey, I can go up and say, show me how many stocks today generated a sell signal today. Out of the S&P 500, by the way, today's action, 17 names generated a sell signal. Well, that's interesting. I don't know any of these names. Well, 2 are in the consumer discretionary sector, nothing in staples, 1 in Alpha Natural Resources in the energy. That must be a real sick puppy, because, boy, the energy space was up today. And so we take a look at this and we go, financials, nothing. Healthcare, Lilly, drug company, drugs, and as well, biotech are in a seasonally weak period of time. You can kind of see that you enter in that little, start to enter that little area there that you're kind of like flatlining. So we go down and we say, well, what else? Industrials? No, not really, not a lot there. Information technologies, not a lot of there. Not in materials, telecommunication, utilities. Today they leaned on utilities. I mean, that's got to tell you something. Out of 17 names, 9 are all in the utility space. Oh, well, maybe they've run their course. They've had a big move, relative strength. Let's go back to that relative strength chart. The utilities are starting to fall. The utilities started to fall before today's end of day. They already began to sell off. Today they just started to really capitulate. So what's really neat is, how do you use better tools? And so for tomorrow, when we come to work, we're going to be looking at these scans, and I'm sharing with you live. And of course, at the end of every week, we look at what stocks are looking good and what sectors the breakdown is. And so when we take a look today, how many stocks generated a daily buy signal? Now, you don't know what I mean by that, so let me just pick on Qualcomm. A daily buy signal, by definition, is a PPS buy signal, that green arrow. Now, what we'd like to see is weekly buy signals. So that's one of the key things. So we take a look at 71 names generated a buy signal. Now the next question I have is, out of all those buy signals, remember, retail, consumer, and discretionary should start to improve. So what names started to look bullish? Well, here's a funny thing. At the end of Friday, if we close up here, God knows why, but Carnival Cruise Lines, I'm not sure if people go on cruises this time of year, spring break, God forbid that would ever happen, right? But Carnival actually had a little high close doji and daily buy signal 3 days ago. This weekly on-balance volume looks fairly healthy. This looks like the market went up, sideways, and it's getting ready for a move up as it's entering a seasonally strong period of time. Ford Motors, for disclosure, I'm already long this, but this market's broken out to the upside. We're actually in this from exactly 1533. That actually is our stop level. So without a doubt, look at the seasonal tendency of Ford to typically go up this time of year. So based on a weekly buy signal, the fact that it's at monthly, quarterly support, that's important information. So even today, we had some stocks, some names in the consumer discretionary, but still that doesn't say what the main sector was. Energy was pretty good. Marathon Oil, for example. We had a little discussion in our trading room today about Anadarko and some of these refiners. Anadarko is one. Had a high close doji the other day. It's already in a buy signal, but these are all the stocks that generated all confirming buy signals in the market. So we go down the list and we say, well, out of 71 names, what else did we have? Whoa, look at that. The financials kicked in gear. Now, these aren't regional banks. Look at some of these names. Bank America. Even the CME Group got in the action today. The CME Group got in the action today. Well, that's a kind of an interesting pattern. Seasonally, it doesn't really do so well right now. And but the volume looks pretty good on a weekly basis. What my takeaway is there is that while it's probably, good with volume and it's probably good with a buy signal, it probably will not have sharp upside because it's fighting a seasonal trend. It might go up a bit, and I get that, but I want to focus my capital and go down and scan for stocks that are in extremely strong seasonal tendencies. Now this is Capital One. Capital One is consumer finance. Oh, do consumers spend money? The retail sector is strong. Are they going to spend money with their cash, or would they possibly use a credit card? Now, wait a minute. The logic is starting to intermingle. So instead of looking at maybe Home Depot, how about credit card companies? Is there a chance that this stock, look at the volume to the upside, friends, right? That on-balance volume is pretty significant, and that seasonal trend is just amazing. So this is a pretty cool way. I don't know if you like what you see, but this is a pretty cool way of analyzing the market. Here's a competitor. This is Discover Financial Services. Man, they are getting a lot of attention here with that volume to the upside. This trend is very strong. You've got to admit that's a nice uptrend in the market. And for the folks that are still looking at volume, scratching their head, going, I don't know about this market. I'll tell you what, this looks like it still has further upside. In fact, if we probably break out above that swing high, and this is not a swing high, that's the swing high, but this is the last conditional change. And if we break out above that high, and that high happens to be 58.83, we'd be hoping to see a pullback and be buying a market move down in here. So if we break out to the upside, you take that area out, there is probably good consideration that this stock might hit 62 or so. Not a big deal. If the market's trading at 58, go to 62, you figure the math, it's a little just under, 10%. I think you all would like that. 10% of a move, it's pretty good. So Fifth Third Bank, so it's now the and Fifth Third Bank's already kind of broken out. I don't think that's a little tough nut there to be buying that type of breakout. But boy, I'll tell you what, here's a company, it's called Legg Mason, it's asset management. Very, very, if the stocks go up, asset management companies might do well. So anyways, you can see where immediately on a day like today, we started to lose a little bit of healthcare stocks. Industrials didn't do a whole lot. Cummins, interesting, they make engines, and Corning Glassware, Corning Incorporated, But the real big mover is information technology. So information technology, semiconductor. Here's the old favorite name is AMD. Wow, AMD has a seasonal tendency to go up, in case anyone didn't see that, and the volume looks pretty good. So there's a stock that might have a little bit more upside, and even the on-balance volume is taking off. And if you didn't see this from a technical perspective, it looks, if I look closely, it almost looks as if it just closed and broke out above its old highs there, friends. Anyway, so we're looking at a lot of exciting areas that I see some opportunity here now, and I'm looking at some volume coming into some of these stocks that haven't even participated with the move, or could start to see a very at least participate a little bit more as we enter the a fairly strong month, which is April. So it helps to identify what the overall market's looking like, because if the overall market still has some legs to the upside, then I want to look at strong sectors and stocks within that strong sectors, and that's where I'm going to start to nail down some trading opportunity. Now, one of the things that we've done before is, and we go over here to a newsletter page, by the way, so we're just going to share this real quick with you, and this will just take a quick second, because I want to show you bonds, the notes, the bond spread, gold, for example. We have this, what we talk about in our trading community is that we have we take a look at the knob spread. This is notes versus bonds, knob, notes over bonds, NOB. So this is the 10-year notes. Notice it says 06, that means June. This is the bonds, that means June. And the funny thing is that unless we break below this swing low, this is one of my favorite little indicators, at 200, rather than using a day, I use a half a day, 240 minute. And if we break this little uptrend line and we break below that swing low, then I'm looking for a trade. Because for me, if you notice here, while bonds did go down, notes went down more. And if we're going to see further upside in the market, we want to see the long end of the yield curve get kind of crushed. And, you know, I understand about the Fed and the tapering and this and that and people talking about yield and such. But, boy, I'll tell you what, if we see a break of this trend line and that swing low, that's going to give us a good indication of further upside in the market, A, or B, a good trade opportunity for trading the knob spread back down to the low end of this range that we've seen. So a little bit longer term trend, I guess you could call it, the low end of the range would give us, you know, maybe a test, a challenge back to about this level. So if you break 810, you've got a nice trade going down to around the 720 handle in the knob spread. These are just some trade opportunities that we talk about in our trading room. We also have stuff we do like live cattle, trading gold. Today, for example, looking at, I'd like to share with you just this last conditional change. I don't know if you guys like to trade gold, but we had one of the things that we talked about today was this specific setup, that if the market broke out above 1329.80, we broke out above that high, then we could potentially see the market move up to testing this next level of 1333. So these annotations are put on our charts, and we kind of go through that with our trading community to say, listen, if you're looking for a quick trade to the breakout to the upside, watch for gold to move to the upside, because there was a lot of room between where prices were at the time and that moving average, and we might see a little pop. And I know there's a few of us in the room currently that were there for that discussion. And so these are some of the trade setups that we like to do in the room. Now, I'm not sure if you guys had a good introduction on what we were talking about. Is now the right time to be in the market? And I think now's the right time to be in the right market. So that's a better statement. And I wanted to introduce you in less than an hour to ways to analyze the market and to let you know there are some pretty strong analysis tools. Now this is my person's navigator. And I don't know if any of you guys have been overindulged with trading software, and I know many of you are friends and use the PPS indicator at Thinkorswim and as well as TradeStation. But I'll tell you what, the person's navigator, I'd like to share with you something that's really, really cool. I mean, this is state-of-the-art stuff. So if I go over to this page, let me share this with you because I don't think anyone else has this type of technology. So let's say we go to, let's go over to seasonals and on balance volume, and I'm going to just save. I like to save everything. All right. So I have AMD, right? Now, let's say, for example, on AMD, we have a buy signal today that was generated today. We'd probably look for a pullback to around, if we got to 393 area, and I would want to place initially my stop underneath that candle's low right here. And that candle low right there is 374. So I would be looking for a pullback here for a buy, and my stop is underneath not that low, but this low, because this is a last conditional change candle. Now watch this. I'm going to do this for our trading community tomorrow, and I'm going to go up here and I'm going to go load shared pages. Oops, no, I'm not. I'm going to go up to publish shared pages. So this is JP Seasonal and OBV. I'm going to publish this. Well, guess what I did? I just uploaded this to a server, and anyone that has Trade Navigator and has this package, they go up to this button right there and they go to load shared chart pages. The next thing they do is they go and they click on that green button, and then they just go and import and refresh, and everything, every annotation, every arrow, every writing, everything that I have, all they have to do is go, as you can see, this says seasonal and OBV, and if you say seasonal and OBV, look what it says here, March 20th, 9:02 p.m., I just refreshed this page. So if you have this, you just click import, bingo, you have everything I just wrote on this chart. So now when we go to discuss it, you say, oh, I see what he was talking about. This is an arrow for maybe a pullback entry, and stops underneath there for an initial move to the upside. And if you think about it, this might be a trade you may be interested in, or if not, at least you have the information at hand what to look for, or perhaps you can look at seeing if AMD, maybe there's something else in that sector, and you click on this button and say, well, what do the competitors look like? Let's take a look at the best known competitor. So instead of looking at just, let's see, where's my boys, Intel, there we go. What's Intel kind of look like? Wow, Intel had not only a daily buy signal 3 days ago, they didn't even care about Janet Yellen, high close doji to boot. Seasonally strong period of time. Intel looks pretty good. Any mild pullbacks there, I'd be interested on looking at Intel as well. So I think the daily on balance volume looks pretty healthy. The weekly hasn't pushed yet, but the seasonal strength of the market really doesn't begin until, you know, on or about April 4th. That's not that many days from now. That's when it has its best seasonal trend. So there is a strong chance that we might see a pullback between now and, say, April 4th, if that makes sense to everybody. Well, if I want, I would upload that, and everyone would get that chart. So if I went and I touched, like, my relative strength analysis, and I made a new announcement, I have new arrows, I put up on the knob spread, and I have this, actually, as you can see, this trend line right here, it's 240. This is a different page. It's the same analysis. And I go up there and I go to pages and I hit publish this. If I publish this, the whole page, everything that I've created on these pages will be uploaded to the server, and those who have this can download it. Every indicator I've created, everything that I've done, we're talking relative strength, and this is Tesla versus the S&P 500, or Tesla versus the Qs, excuse me. And this is a spread chart that's telling me that as the red is going up, Tesla's outperforming the Qs. As the red goes down, it's telling me that Tesla's underperforming the Qs. Now I'd like to say, what's Apple doing to the Qs? Well, if we start to see, by the way, a move in Apple, and we start to see that relative strength, that red line, break out, it's going to give me confirmation. So that's all within this one page. It's a pretty cool feature. So with Trade Navigator and with the John Persons indicators in everything I've ever created. In fact, when you go up to pages here and you go to load shared pages, every page that I created has windows. This is one page. This is called the relative strength analysis spread page. It has 1, 2, 3, 4, 5, 6, 7, 8 different windows within each page. So you have indexes and AD and unbalanced volumes, seasonal and OBV, seasonal planning and scanning, RS analysis, newsletter, trading room, multi-time, crude oil, grains, meats, sauce, Forex. Meats alone, I don't know if we got a lot of meat traders here, but if you go over to the meat pages, and if you ever were interested in spread trading, we do a lot of spread trading as well, which is really, really cool. Because come this summer and spring, if you look at hog prices, I don't know if you guys have seen hog prices lately, talk about through the roof. You guys better go buy, run out to Costco and buy some pork ribs and throw them in your freezer, because ribs are going to be real expensive this summer, friends. This just takes a second to load. And in this page, and I don't think I broke the bank. It's all coming up together. Here we go. So in this page, we have live cattle charts. We have feeder cattle. We have the spread charts all created. What the difference between live cattle front month, back month is. What the spread difference is with lean hogs, front month, back month. So these are all spread charts to give us relative strength and trading opportunities with each and every different market. So if we take a look at the hog market, this, for example, is, I mean, obviously there's 9 windows. The Commodity Trader's Almanac states that, and the reason I'd never jumped on this trade, because at the beginning of March, one of the best trades of the month of March in the Commodity Trader's Almanac, the research that we've conducted states that March is a seasonally strong time period for hog prices. Well, if hogs generated a buy, and I'm looking at the seasonal strong period of time, I mean, it was tough to chase this one. A market that goes from 106 to 112, it's tough to chase. But this is a gift that just kept on giving. But needless to say, whether you take the trade or not, the information is there. It's very powerful. So with that said, a lot of people, my sector analysis and the information that we provide, obviously we do top down. What's the health of the overall market? What's the seasonality of the overall market? Well, let's take now let's start from the top. Let's work our way down. What sector or commodity trend is starting to enter a seasonal time frame? Now let's take a scan and find out the leadership of the group. Now, I don't know if you noticed those scans, and those were all customized scans. And it broke down PPS, it broke down daily, weekly, it broke down high closed doji, low closed doji, not just a daily, but also a weekly, and it breaks down all the sectors. If you want to do it on NASDAQ, Russell, commodities, futures, Forex, all those scans are created with that criteria built into it. It's all customizable for what you want. But we use the PPS indicator to scan for those buy and sell signals in those strong seasonal sectors. So for tonight, we did I think we've covered a lot of work, which is pretty cool. And I know we have a few people in the audience tonight that are already subscribers to this. But if you are interested in learning about this, a lifetime membership, if you're interested in an incredibly powerful trading tool that comes with complete hand holding and everything you could possibly imagine, we have a spring special offer for you for a lifetime membership. It's a one-time fee, and you can make it over multiple payments. Just give us a call if you're interested. We'll also include 3 months in our trading room, and that's powerful in and of itself. I'm also including an advanced trading course which highlights most of what we talked about, that the tools that I use. So this is, I think, a really unique way of getting active in the market. The trading room and the Lifetime Navigator member gives you access to all our archive planning and scanning sessions we do each and every Monday. It gives you access to our daily worksheets. You come into the trading room. We talk about what sets up a possible trade, why, where our pivot points are, the exclusive moving average method using my pivot point analysis, our specific setups and trigger. The last conditional change method, we've been very active and had a very, very, very good quarter so far. We started this new process at the beginning of the year. We also look at the high close, low close, breakout, breakdown patterns, and of course sideways channels, but we haven't seen many of those lately. We talk about what triggers a trade, how and when to enter orders, when to exit, which seems to be something a lot of people have an issue with, how to set targets and when to trail stops. We have a one-to-one risk-reward breakout method that's extremely effective. A lot of times when we take it, we're kind of sad we used the one-to-one reward objective. We should let them trail, but it is a defined trade setup, and that's the key because it is completely rule-based. So with that said, it really helps to organize people's trading. I think we've had just an amazing amount of feedback from people who just love the new format, what we've done together, and working together. And I think it's going to markedly improve not only your consistency, but also hopefully your discipline. And this is just a little sample. I like using this because the funny thing is we did we start off every day with a daily positive thought, and then we continue with reports, events, earnings, what our daily buy and sell signals are, weeklies. We go and review this. In fact, I'd like to, it's kind of funny for this week, I think we, looking at the weekly, yeah, I'm going to probably bring that up for you just to share with you. This was one of the things for this week. In fact, all our members are going to receive a complimentary copy of the second quarter seasonal stock traders sector issue. This is our positive thought. What the superior man seeks is in himself. What the inferior man seeks is in others. The takeaway is don't worry about others' trade. Focus on your abilities to deal with the markets. You know, one of the things that we talked about, this is from earlier this week from Monday, we said weakness, notables. Weakness in these sectors could give opportunity. So intra-week rallies could give opportunity for weekly credit call spreads, especially BIIB. Strength in regional banks, insurers, casualty REITs. Watch for weakness for long entries. This is what we provided on Monday. The seasonal strong sectors, the seasonally weak sectors, and potential trend changes. We talked about our all of these sectors, looking at what would happen, what is it going to take for a potential trend change. And these highlights there is because the euro gave that trend change yesterday's close. Crude oil gave that yesterday's close. Gold gave that yesterday's close. So that's why we talk about it. We actually have this on the ledger. Apple, watch for daily buy or breakout above 539. It's the last conditional change. A couple other stocks we're going to look at is Leggett and Platt, which is a home furnishing, and Bed Bath & Beyond, believe it or not, man's most hated store. So I just wanted to share with you what the checklist is that we go through and specific trades. Like, for example, this particular week, we had Ross Store, buy it here, put your stop there. eBay, buy it here, put your stop there, or stock replacement strategy. July double nickel calls, it's a 49 delta for 320. In fact, we're down to a 1/3 position on that trade and still holding them. NBR and Symantec. These were the trades. This is a while back, but I just wanted to share with you guys what the kind of work that we're doing with students and traders to confirm their abilities to be able to focus on the right things. I'm taking a sincere interest, a strong interest in traders' abilities, and I think this is a great way to get started and to be a part of a community and an incredible software, as well as taking advantage of the technology to be able to upload and download every single page and every time we have it. So if you're interested, give us a call, contact us at 561-655-1881. I think just to inquire about it, you can also, if you go to our website, Sonia says it's awesome. TradeNav looks good. Absolutely. It's extremely powerful information. I think that for the most part, when people look at starting out in the markets, I know that, and I hear this, a lot of people say, man, I've spent so much money on education, but I like what you do. And the problem is a lot of people just, there's a lot of noise out there. And I understand that, I really do. So with that said, I just want to make sure that everyone, you have an opportunity. You can go click on this link if you'd like, and just go read about it, investigate it, give us a call. I'm going to tell you, you come in and you can get it. This includes the Trade Navigator, the software, and my indicators for life. It's a one-time fee. It's, Alan, it has a lot more, and where is it better than TOS? Well, Alan, there are a lot more things that I've put in here than just the PPS. I think you would figure that out. Thank you for asking, though. The key is that I think looking at all the things that I've done as far as the scans are concerned, the scans that you get. So again, when we talk about all the pages, the spreads, everything that's set up, so we talk about, let's call it, well, here, I'm going to just go over here and show you this. This is pretty neat. So let's go over here and go to seasonal and planning. All right, so we have 3 different charts. The first thing we have is a daily chart, a weekly chart, and a monthly chart. So if I want to figure out where a market might go, I want to figure out where the market's been. Because if I'm looking at a seasonal trend that goes up and I'm buying after a multi-decade high, I think I want to reevaluate things. So when I take a look and I want to run a scan, so here's something that's pretty cool, okay? I want to run a scan, but I don't want to run any scan. I want to run a scan that I feel pretty comfortable, not just a PPS buy signal in the S&Ps, break it down to whatever sector I want, but I also want to find out, give me a high close doji scan. Did we generate any high close dojis today in the S&P 500? Well, because PPS, while as good as it is, I got news for you, friends. The high close doji scan at times is an awful lot better. Now, this is, as you can see, it's a pharmaceutical. The seasonal tendency of this market, I won't even touch it, not this time of year. Anadarko. Anadarko is a strong seasonal tendency, and I can immediately take a look and say, all right, so it's at 83. It came off of 74. On balance, volume's been on the rise. I would actually be buying from the peak to the trough, a little bit of a pullback. Boy, that weekly on balance volume looks a little bit healthy, and we did generate a high close doji. So I think that might be, a stock I would be looking at, and I can go right on down the list and just with a push of a button find out what stock looks good from a high close doji perspective. Of course, CME Group did generate a high close doji, but we discussed that already. Capital One generated a high close doji. It might be hard to find, but that's the doji. And the high close doji is not just a close above a doji, it's a close within, there's certain parameters. So it's already been programmed, and that's something I guarantee you TOS does not have. So there are a lot of things that we've put into this package, all in one page, every setting that I have, my entire proprietary settings, on balance volume, the moving average setting. All you have to do is go up here. If you clicked on load that page, immediately you're going to have in front of you, and this is what's cool, that exactly what you see here. This chart, those indicators already overlaid, you don't have to create a thing. $3,500 is a one-time fee for life. So anytime I change a page, anytime I create a new page, anytime I put an annotation and say, hey guys, I'm thinking that we want to buy here and put our stop there, for example, and I upload that, you will download it and you can put it to your watch list. So that is like a way of communicating via technical analysis and finding out what we're looking at. So there's a lot of awesome potential here in this realm with this type of technology for me to do the creative work for the the technical analysis and you to get it in your hands, and then to come in the trading room live and be a part of our members, people using the same stuff and interact with people. That's what's special. That's what I think is going to be just a new way of trading with people using this type of technology. So this is something, and I don't know if you're saying that it seems to display 3 days late. I'm not sure if that's not necessarily true. In fact, TOS actually sometimes gives it a day earlier. Everyone, it depends on data. TOS is very robust. Don't get me wrong. The PPS indicator is very, very reliable on TOS. No question about it. I mean, we get an incredible amount of compliments with that. Incredible. It's probably one of the most popular indicators, licensed studies on TOS. Not just from retail traders, but some of the institutional guys love that indicator. So the moral of the story is this is an analytical tool. There are those who do not have TOS. There are those who have TOS that like this as well. There are those who have two different analytical studies. For lifetime membership for this particular event, if you're interested, you can contact us or you can visit us at our website and just go to that page that we've, I'm not sure if I put that up, so let me double post that for you guys. You can click on that. You can click on that link and you can read more about it. And if you'd like to come visit us or call us, certainly feel free to give us a call. I know I've taken a lot of your time. I know it's March Madness. You guys might want to watch some games, but boy, I hope you have found a benefit at the very least just to find out that this is kind of exciting, new. It's just beyond most traders' wildest dreams to say, hey, if John Person creates a new page or a chart, I get to have his exact settings on my computer and download it. John just put these annotations on the chart. He uploaded it. I can now see that, and now I'm learning how this is working. And I think it's you know, there's a lot to the Trade Navigator product, that's for sure. And this was not even a Trade Navigator session, but we are launching this, and this is an amazing introduction that we're putting out. You'll see it in months to come. And I promise you, it's not going to be for $3,200. But in any event, I really had a good time with you guys tonight, and it was good. I always like to, for me, there's my favorite phrase is the harder I work, the luckier I get, and I firmly believe that. And I think that tonight, you know, to go through this work, you know, it pushes me to the kind of the edge. I was using today with our students and going through some stuff like Apple and looking at other things today, and you know what? It helps me to look for better opportunities. And so with that said, I want to say thank you guys for your time, and I hope you walk away with some knowledge tonight, at least as a summary. You saw many variants and differences between actual volume and on-balance volume. You saw the difference of how do we utilize daily and weekly time frames, and how we put things together. So come visit us on this page, read more about it, and I think you'll be very interested. It's a very special offer, and you'll be able to work with me. I'm in my trading room every day, except for special situations, of course, from 9 to noon, every day religiously. And we go through this information, and every day we have our worksheets. So with that said, I bid you good night. Thank you for your time. And again, if you want more information, click on that link. You can also give us a call at the office, and the number is, once again, or you can simply email us at info@personsplanet, or go Sonia at personsplanet.com. She'll certainly give you a hand. She's one of our students and is very proficient in Trade Navigator as well. By the way, Trade Navigator is a separate company altogether, but they have, more importantly, they have an incredible, one thing just to give a, you know, how neat it is, they have this little tool up here where, if I could show you, where it says help, and you go down here and remote assist, you give them a call and you hit remote assist, right? and just station ID, just type it in, and they'll be on your computer and help you fix your problems, and if there's an issue. The tech support is just amazing. So, I mean, for clearing and execution of stock options, hey, what more could you do than get just one step ahead of the game? Genesis, and for you folks that have your favorite brokerage firm out there, great combination. Genesis is not a brokerage firm. It's just a analytical platform, just to let everyone know. So with that said, thank you all very much, and you guys have a great evening. And then whatever you guys are voting for your Final Four, I hope if you're into March Madness, I hope your team wins. So you guys, great audience. Thank you all very much. And I do hope that I kept you engaged as far as the new format of technical tools that are out there, and a trading platform and analytic platform. Have a great evening, everyone. Thank you.